In trading, confidence and ego look similar on the surface, but deep down they are completely different animals. Confidence is quiet. Ego is loud. And if you don't learn to tell them apart, the market will teach you in the most expensive way possible. Confidence comes from preparation. You've studied the charts, you've back-tested your strategy, you know your risk, and you accept that losses are part of the game. You don't need to prove anything to anyone. You place a trade, set your stop loss, and let the outcome play out. Win or lose, you stay calm, because your confidence is rooted in process, not prediction. Ego, on the other hand, is fragile. Ego wants to be right, not profitable. Ego trades to satisfy identity. I am a good trader. I can't be wrong. The market has to come back. When ego takes control, stop losses become optional, position sizes get bigger, and logic quietly leaves the room. A confident trader says, "This setup has an edge, but it might fail." An ego-driven trader says, "This setup cannot fail." That one sentence changes everything. Confidence allows you to walk away from bad conditions. Ego forces you to trade even when there is no clear setup, because sitting out feels like weakness. Confidence is okay with missing trades. Ego suffers from FOMO and jumps in late, usually at the worst possible price. Look closely at how you react after a loss. If you calmly review the trade and ask, "Did I follow my rules?" that's confidence. If you feel angry, embarrassed, or desperate to make the money back immediately, that's ego talking. Revenge trading is not a strategy problem, it's an ego problem. Confidence respects risk. Ego underestimates it. A confident trader thinks in probabilities. 10 trades, maybe 6 winners, 4 losers. Ego thinks in certainties. This trade is sure shot. The market loves punishing sure shot thinking. Here's the irony. Ego often disguises itself as confidence. Overtrading feels like confidence. Increasing lot size after a few wins feels like confidence. Ignoring opposite signals feels like confidence. But real confidence doesn't need to prove strength. It shows strength by discipline. Confident traders are boring. They repeat the same actions again and again. Same risk, same rules, same patience. Ego wants excitement. Ego wants big wins, fast money, and validation. That's why ego burns accounts quickly, while confidence grows them slowly. Notice how confident traders talk. They say things like, "I don't know what the market will do next." That's not weakness, that's maturity. Ego says, "The market will go up from here." Confidence says, "If it goes up, I'm in. If it doesn't, I'm out." One of the clearest signs of confidence is the ability to exit early when you're wrong. Ego holds and hopes. Confidence cuts and moves on. Ego attaches emotion to a trade. Confidence treats it like just another execution. If you want to build confidence, stop focusing on money first. Focus on execution. Did you follow your entry rules? Did you respect your stop loss? Did you manage risk properly? Confidence is a byproduct of consistency, not the other way around. The market doesn't care about your ego. It doesn't know who you are, how smart you are, or how many losses you've had in a row. It only reacts to orders. The faster you detach your self-worth from your trades, the faster confidence replaces ego. In trading, ego wants to win today. Confidence wants to survive long enough to win over time. One blows accounts, the other builds careers. So next time you place a trade, ask yourself one simple question. Am I trading to follow my plan, or am I trading to prove something? Your answer will tell you exactly who is in control.